Welcome again to Etienne's Place. The days are ticking, tick tock, as it did for the filing of tax returns approach. Now, there's quite a bit of anxiety buzzing around as to what is going to happen. And my advice to clients is go ahead, business as usual. The IRS is expected and has announced that January 28th will be the beginning of them accepting tax returns. So my suggestion is get your documents together, head to your tax preparer, submit documents, have your tax preparer prepare and have ready to go your tax returns. There's no point, procrastinating, waiting, hanging on, listening to what's happening. Go ahead, submit, have your tax returns in the pack, so to speak, so that once the word go is given, once the green light is there, then your tax returns will be submitted. Okay? Now, of course, after submission, we have no guarantee. We don't know what will happen in terms of how quickly the processing will take place and how quickly you'll be able to receive your returns. That is out of your hand. That is out of our hands as preparers. So do your part. Submit your documentation, have your tax returns prepared, and so at least you will be in that batch waiting to move forward once we're given the green light. Okay? Fine. Now, there is a bit of concern or question that has been coming to my attention from my business tax clients. And it essentially has to do with the timing or when is it appropriate, in what period is it appropriate to report certain items of income and expenses. So questions are being brought to my attention. So if I should submit an invoice for services provided in 2018, but I end up receiving payment sometime in January 2019, should I be reporting this as income on my tax returns in 2018, or should I defer it until I'm reporting 2019? On the expense side, if I receive a bill, an invoice from a client, from a utility company, whatever, and I received it in December, but I've not paid that bill until January. For tax purposes, should I be reporting that expense and therefore take that write-off against my 2018 tax returns, or should I be postponing that until when I do my 2019 returns? The answer to this is a little more than just a tax-related answer. It has to do with the method used in preparing your financial statements. And as I said, usually we keep it very, very simple. So you can decide to use what is referred to as the cash basis for your bookkeeping, or you may choose to use the accruals basis for your bookkeeping. Let's start with the cash, which is a simple and mostly used method. Under the cash basis, we're simply saying we are going to report as income all cash received in the year. So for 2018, I am going to report a total 2018 income based on cash that I have received in 2018. For expenses, same principle applies. I am going to report expenses based on all cash paid out. All expenses paid out by cash, by card, by checks, whatever. But it must actually be money that left my business account. And I'm going to report those expenses, those cash movements as expenses. So that's a cash basis. Anything outside of real money received, actually received, and real money actually paid out, I will ignore because I'm using a cash basis of accounting. or I'm preparing my bookkeeping on the basis of cash coming in and cash going out. And most businesses, small businesses especially, will also use that basis for tax preparation purposes. Okay, so going back to the initial questions, if I send an invoice out in December, but I receive payment in January, I have not received payment, I have not received cash in December, and therefore I would not be reporting an income for that transaction in 2018 because I would have received that payment in 2019. Same thing for the expenses. If I receive an invoice, a bill, and if I then end up paying that bill in 2019 January, although it was a bill received in 2018 and it relates to something done in 2018, the fact that I am paying this bill, money is leaving my account in 2019, although related to 2018, I would report that expense for bookkeeping purposes and on my tax returns as a 2019 expense. So there you have it, cash basis, simple, straightforward. The other method, as I mentioned earlier, is the accruals basis. Not difficult. It is saying, whenever I deliver goods or services, I would have earned an income. And my recognizing that I have earned an income is not dependent on having received the money. So back to our December scenario. If in December I send an invoice to a client, although I've not received payment in December, for the accruals basis, I'm going to treat that invoice or the income represented by that invoice as 2018 income. I have accrued, I have recognized the fact that I have worked, I have provided services, I have earned an income. And so on the accruals basis, I will report this as income in 2018. On the expense side, the principle continues. I receive an invoice from a client, whatever, for services or a utility company. And so it is a real charge against my business. My business consumed electricity service, my business consumed internet services, staff has worked for me. And the fact that I have not yet paid those bills and I will only pay them in January of 2019 does not change the fact that my business has incurred these expenses. And so they are real charges against this year, 2018, profit and loss or expenses. And therefore, all of the accruals basis would end up as expenses on my both financial report and by extension on my 2018 tax returns. Okay, very important to know. I said before, it is so much simpler though for those who go along with the cash basis because you're saying, I'll just keep it straight. I'll be able to, as it were, see my cash flow in real time. One of the great drawback with the cash basis, however, is that it would never show your true financial position, okay? Because under the cash basis, if your bank account shows that you have $20,000 balance at December 31, 2018, then you have to be very careful and not start jumping for joy that, okay, I have $20,000. Because on the cash basis, you would not have recognized the fact that there are several bills yet to be paid. There may be a final payroll that will not be paid until January. And so those things are to be taken into consideration to recognize that this 20,000 is sitting in the bank, but then there are some bills waiting to be paid from it. So the true balance that I have at December may not necessarily be, oh, I shouldn't say the true balance, the real balance that is available to be applied to future expenditure is not quite that 20,000 because there are some to be paid bills that are waiting in the wings, so to speak, that's going to be charged against it. So that's one of the great drawback of the cash basis. The accruals basis, on the other hand, will say to you, okay, yes, the bank has $20,000 in it, but on your financial statement, you will also see another item called accounts payable. That's a clear indication that, okay, yes, I have 20,000 in the bank, but here I have bills amounting to $6,000, $7,000 not yet paid, but is reflected on my financial statement as to be paid. And so my financial statement on the accruals basis will give me a better, more realistic picture of my business's financial position. Okay, so there you have it. Going back to strict tax preparation, we're saying that a simple way to go, and most taxpayers, most small businesses at least, utilize the cash basis. Now, once a business has decided to go one method or the next, the cash method or the accruals method, you are required to stick to that method. You cannot be meandering from accruals basis to cash basis in 1 year back to the next. No, no, you cannot do that, because you would never get real comparability between 1 year and the next if you move on. And again, it will be sheer confusion. To be sheer confusion. Okay, so that is it for your cash basis versus your accruals basis. I said before, although it initially was a tax question, it goes a little further than that. You know, it goes to the basis on which you prepare your financial statement. Because remember, what you end up having on your tax returns really comes from what the financial statement is reflecting. You know, give or take maybe some other adjustments that are more tax related adjustments. Okay, good. So I would suggest that going forward in 2019 is still early. That you decide, if your business just starting up, make an early decision as to how you're going to go about doing your bookkeeping. All right, and if you're a business that has been in operations for a year, 2 years, 3 years, then be careful not to be switching between. Okay, if you want a good fulsome picture, go accruals basis. For simplicity, go cash basis. And there's nothing wrong in terms of being illegal about cash basis. Okay, it's acceptable, but you would never, in other words, if you should approach a bank, a lending institution or so, and they say, okay, bring me your financials, then believe me, they will not be comfortable accepting a cash-based set of financial statement. They would want to see an accrual set of financial statement, because that will show the true picture. Okay. Now, as a final say, another statement that usually accompany your basic accruals balance sheet and profit and loss account is your cash flow statement. Now, if you prepare your accounts on the accruals basis, you will also have a supporting statement known as a cash flow statement. That now will give you your real cash outflow and inflow. So it will give you, on a month by month, quarter by quarter, what is your real actual cash inflow and your real and actual cash outflow. And so, yes, your accruals is a big picture, and the cash flow statement will actually give you a real money in, money out perspective, which is so very important for us businesses for us as businessmen to be looking at. Okay, good. So once again, thank you for joining me. Thank you for joining us here at Etienne Business Solutions. Remember, you need to subscribe. Subscribe and be kept up to date with all these little tidbits, these nuggets that I call them from time to time. Okay? And keep on keeping on, keep on keeping on, because sometimes you'd never know that success is just around the next bend. And had you known, you would not have given up just now. So I encourage my fellow workers, my clients, small businesses to keep on keeping on and always try to do what is right. Try to do what is right. Walk on the straight and narrow. Hard work, honesty, integrity will bring you the success that you so richly deserve. This is Etienne Business Solutions, and I'm David Etienne at Etienne's Place. thanking you again and asking you to have a wonderful week. God bless, and I'll see you again in the coming days.